What a crazy day. What's going on, guys? It's Ricky with TechBud Solutions. And before you guys even say it, I've already posted my loss on Instagram for my MSTR short. Again, I love to show you guys my green days and my red days, and it was definitely a red day when shorting MSTR. I went from being green on MSTR to giving it all back as direction quickly changed. The news is that Trump not only found a solution for Mexico and delayed those tariffs of 25%, but also found a delayed solution for Canada. So again, the sentiment was bearish. It quickly turned bullish as sentiment changed as these delays presented themselves. With that being said, we're not here to talk about that. We're here to talk about Palantir. Now, I want to talk about what was very impressive about Palantir's earnings. A lot of you guys, if you've been watching me for some time, you know that I love shorting stocks, but you know one that I don't ever really try to short is Palantir. You might be like, well, why is that? Well, Palantir is incredibly bullish, and it's so incredibly bullish that it literally almost feels like it's impossible to short. Like something very significant has to be presenting itself of this thing we're tracing for me to even consider like, wow, maybe I want to short it for a short period of time. But even then, it quickly finds its support and begins to recover. And you kind of have to give respect where it's due, right? This company has not only been performing very well, because companies can perform technically very well, like based off of price action, just like MSTR. MSTR can technically perform well, but it reports terrible earnings. Sorry to throw MSTR under the bus. With that being said, Palantir reports always better than expected earnings, at least recently, because if you've actually paid attention to Palantir, at one point it was trading at nearly $5, sub $6 per share. And then now we're trading at over $100 for the first time ever in history. So what happened today? Well, Palantir reported earnings, and it was the best earnings it ever reported in every quarter. If we look at their overall earnings, they exceeded expectation of 11 cents. They came in at 14 cents, and revenue came in at $827 million versus $778 million. They also reported 32% year-over-year growth, and I think it was $5.2 billion in cash with no debt. For me, from what I've seen, especially for such a young company, and by young, I mean, hey, this thing is trading at, what is that? If we look at the week and when it actually IPO'd, this is in 2020. So it's been less than 5 years, and this company is super incredibly bullish and performing very well. It's very cash rich based off of what it has in its balance sheets. So I wanted to talk about all of the good, right? I wanted to highlight that this was a very impressive earnings. It did exceed market's expectation. And did it earn this push? To some degree. Now, the thing that I also want to point out is that, well, this is before it actually, this is before the 22% push, because that's what it's up right now after market hours. It's currently at a market cap of $190 billion, but that is before the 20% push. So now it's trading at, what is that? $210 billion. I mean, we'll see tomorrow for the exact number. But the thing that I want to highlight very quickly is, okay, well, is it all good news? And I found this post to be very interesting. So you guys let me know what you think. So this guy seems to not like Palantir. Now, I wanted to highlight all of the good, but I think it's also important to talk about some of the potential risk with what maybe Palantir is doing. So this guy is saying the entire business is a scheme built to move money from shareholders' pockets to the company's insiders, who systematically dump their issued shares onto retail bag holders. Now, that's a lot of words. What exactly does that mean? So this guy is saying that if you look from 2023 to 2024, both years at the end of the year, you can see versus what the company earns in net income from 200 to what it pays in stock compensation. So what's stock-based compensation? That's what he's saying to their insiders. So it could be employees, it could be investors, it could be whatever, right? Their CEO, whatever the case might be, stock-based compensation. Why are they paying out more than what they make each year? So 475 is what they reported here versus 217. So that was their net income in the thousands. But again, their stock-based compensation is significantly greater than that. And again, 2024, 467,000 versus 691. And again, this is in the thousands, right? Why are they paying more in stock-based compensation than they are in net income? That is a little odd. I looked a little bit more into it, and then I came to find out that some companies like to offer stock-based compensation to be competitive, to hire very aggressive and well-performing talent. But to spend more in stock-based compensation than what you make in net income, that is a little odd. And then I looked a little bit more into it even then, and you can do your own due diligence. And are insiders selling? Well, the CEO is consistently loading off on his shares, and so are a handful of other insiders. Now, this doesn't take away from Palantir reporting a way better than expected earnings. Now, the part that I do want to quickly highlight, and this isn't updated because this doesn't take aftermarket hours into consideration, is its PE ratio. 400 might seem kind of extreme, right? It trades at a multiple of a PE ratio of 400 times its earnings. It's even greater now. I think it's closer to 700 now after it being up 20%. So think about that. This is a 200 based off of now the new market cap of $200 billion. Yet the company reports, and again, this is based off of its most recent earnings, has a revenue of under $1 billion. Now, don't get me wrong. It's an incredibly young company, so it does have a lot of growth potential. But is it overhyped? We're talking about a $200 billion valuation market cap, yet it produces less than $1 billion in revenue per quarter. And that's after a very impressive quarter, right? If we look at their previous quarters, quarter after quarter after quarter, they do a very good job. Now, again, I don't want to bag on this because it did report much better than what it was expected. But is it justifiable at a $200 billion market cap? That's all I'm here to kind of present to you, is that, of course, you have to do your own due diligence. Please make sure that, again, if you are a long-term investor and you had no intention of selling, then you shouldn't sell. But I always think it's important to take both sides into consideration. It can allow you or encourage you to be a little bit more informed, to do a little bit more digging, and maybe find out of like, no, hey, I still strongly believe in this company. I think it's relatively very young and it's only going to grow more. That can be your focus, right? That can be your perspective of Palantir. For others, it's like, yeah, maybe it is incredibly overvalued, right? From highs or lows of $6 to now highs of $100, it is huge growth. The only other company that I was able to see that had a relatively similar PE ratio is Carvana. And I know a lot of you guys don't like Carvana because of what it's done in its past before, but this one went from a $3.55 price per share to now trading at a $250 price per share within a very short period of time. This thing trades at a multiple of over 1,000 times its earnings. I thought that was pretty interesting. I wanted to share it with you guys and see what you guys thought. With that being said, again, congratulations to Palantir investors. There's no question that a 20% beat on its earnings or on its price is incredibly impressive. I know a lot of people are heavily invested in Palantir. Hopefully you do your part in taking profits when it makes sense to you, right? Palantir is an incredibly bullish stock, and there's a reason that we don't necessarily like to focus on shorting it because, again, it goes against our criteria of market direction. It's much harder to short something that the direction is against you, just like Palantir. The time will come. If this AI bubble is a bubble, and once it does burst, then there'll be a lot of opportunity there with Palantir. But for now, it's incredibly bullish. It's very cash rich at $5.2 billion with no debt. And that's the part that is so impressive, is that it is in such a good position that even if this is maybe a little too good to be true, they are positioned very, very well. You guys let me know down in the comment section what you think. I appreciate your time. I hope that earned your thumbs up. I hope to see you for tomorrow's live trading session. And if you want to tune on in, second link in the description down below, and I'll see you at market open. Like always, let's make sure that we end the year on a green note. Take care, team.